Good morning. Welcome to the Financial Pillars All About the Money podcast, presented by Our Neutral Voices Media. Our show is all about helping our audience understand money, mindsets, and tap into the economic knowledge that builds financially secure individuals, families, and communities. So whether you're tuning into our show to learn about budgeting, building credit, investing, or starting your own business, we're here to break down the knowledge in a real and relatable way. I'm Ryan Leopard, private banker with Star Financial Bank. Go around for some intros.
Happy 2026. I'm JJ Foster, mortgage loan officer with Lake City Bank.
Terrence Bush, a personal banker at Star Financial. Happy Black History Month and a happy 2026, everyone.
I got that back. Happy Black History Month. Happy New Year. So excited to be back on our first episode of 2026.
First episode, take two.
Yeah.
You're supposed to tell that.
Document that.
This was going to be perfection. My name is Ben. I'm a branch manager at Flagstaff Bank. And again, I'm so excited to be back.
Awesome. Like the gentleman said, first episode, first show of 2026. So let's catch up a little bit. Ben, how you been? What have you been up to?
I've been well. Work. Took a little bit of personal time, so I traveled. I would say a highlight of that was I went to Puerto Rico.
Awesome.
So that was really really exciting. It was also reflecting, gave me an opportunity to really reflect on my personal career. So I would say I'm back revamped.
Yeah. First time Puerto Rico?
It was my first time.
Yeah,
Yes,
it's beautiful. I've never been there.
Yeah, it was beautiful. So can't wait to go back sometime.
Yeah. Came back to the snow, right?
Yeah. Yeah. But anyway, it's that part of the beauty of Indiana. So I'm excited about that.
Awesome.
Yeah.
Terrence, what's new in your world?
Honestly, just trying to survive the weather and keep my head on my shoulders with everything that's happening. Yeah.
Awesome. JJ?
I know, man. I feel so bored and ho-hum. This man been to Puerto Rico. I mean, wow. I'm around here doing mortgage loans and dealing with 14 to 18-year-olds. But
winning basketball games too, though, right?
winning basketball games.
Nice.
It's been good. We look for you out at Carroll. I know that's your stomping grounds, and you and the boy typically come out and visit, but you didn't make it this year.
No, I had some baseball practice that night. I think it was on a Friday, so I didn't really find out about it until I got home and I saw it on the news. So,
Okay.
yes. But
Good guys won, too.
good guys. Carroll won.
You psyched.
Yeah. So, Terrence, you want to take us in with a little prayer?
Absolutely. Dear Lord, thank you so much for gathering everybody here today. Thank you for reuniting me with my friends and family here, that we are able to share our knowledge with our listeners and viewers. I pray that you see us all on our way as we exit this building, as we head to our destinations for the day. And I ask that you keep Tamara and her mother in our prayers, for her mother is going through a rough time right now. In your name I pray. Amen.
Amen.
Yeah, I want to give a little thought out to Tamara in this time. So, first show, 2026. Want to start off talking a little bit about predatory lending. So, JJ, what is predatory lending?
Predatory lending is when somebody takes advantage, really, of distressed people, distressed communities. Folks might not be able to get qualified or traditional financing, so then therefore, sitting over in the wings is somebody that has some bad terms, high interest rates, and it's just like it says, predatory. It's like you think of a lion preying on a gazelle. It's lending institutions that are preying on distressed people.
Yeah. What are some examples of predatory lending?
Ooh, example of predatory lending. So for instance, those individuals that are working and they're not they're living essentially paycheck to paycheck, of course. When you're stretching your funds to the point where you're incapable of paying your bills for the next month, that's where those like payday lenders come in. So if you need an advance on your paycheck so that you're able to pay your bills, utilities, rent, things like that, they go in and they give you that money, even if it's just $300 to $500. They give you that, and in return, they charge you an absorbent amount of interest. So I'm talking like basically credit card percentage interest rates. We're talking like 28 all the way up to 30 plus interest rates. And while they're legally able to do that, that is pretty much what starts that debt cycle, because when you do it once, okay, now you owe that much from what you borrowed them, with the astronomical interest rate on top of that. And then trying to pay the interest down alone is barely going to touch your principal, depending on how much your payment is. And then on top of that, if you're still struggling to pay your bills as it is now, and then they're taking increasing funds away from you just to repay back another debt, you're basically going to be put into a cycle where you're incapable of getting out of that.
Gotcha. Ben, anything to add to that?
Yeah, pay attention to the loan time. So the APR, the finance charge, the monthly payment. Both well said. Some of the things that we want to pay attention to when you're borrowing money would be, what is the interest rate by itself? What is the finance charge? What is the total interest that you're going to pay during the entire lifetime of the loan? And also, what is the monthly payment, and what does that look like for you? I really believe the monthly payment is also the very most important tool, because it gives you the affordability factor there. And so, for one to be able to service the loan, pay the loan as required, they need to be able to afford the monthly payment. They also need to understand the terms of the finance charges. So, what does that look like? Are they paying interest as they're keeping the loan, or are they paying the interest up front? Because there are some loans that front load the interest, where you only find that the monthly payment is structured on principal and interest, but the most of it is only going towards interest. And then the question comes here about, how long are you going to service this loan for? So really paying attention to the loan terms. And I would normally say, for anyone who is not really familiar or may not be exposed to borrowing, to really going and making sure that they understand the interest, the monthly payment, the finance charges, and also they can make sure they understand, how does this correlate with my debt to income, because that plays a factor, right? And so the loan needs to be able to make sure that at least it affords the person to be able to pay for their basic expenses, to service other debts, and also gives them an opportunity to accommodate this loan, pay it easy, and pay it off when needed.
Gotcha.
And I was gonna say, to Ben's point, a lot of times everything that he just said, that stuff is hidden when you're dealing with predatory lending institutions. So, he says, make sure you understand, but it might be tucked away down there. But you definitely need to make sure you understand those loans. I mean, the biggest trick out there right now, we starting to see it with cars. These buy here, stay here. A car loan typically is 4 years, but hey, let's stretch it out. We'll give you 15 years.
They're doing 15-year car loans.
They're doing. I'm telling you, I've seen people. I've got relatives who rolling whatever high end cars. Oh, my payment is only $200. They think they're getting over, but again, you extend that out. I mean, that's a house payment. To Ben's point, that interest over that, you look at it, you can pay for that car a couple times.
Yeah, I was gonna say, unless that's a brand new car, then that car's gonna die twice in that lifetime.
Yeah, true.
Yeah. So when you say hidden, I mean, is it they're intentionally hiding terms of the loan, or they're not explaining the terms of the loan? Who does that fall on responsibility wise?
It falls on. I mean, it's just like, and I know, we're gonna do a segment on scams and things of that nature. Anytime somebody's putting a sense of urgency on you, hey, let's hurry up, let's do this. I mean, that's a red flag, and that's what's happening. They'll explain something to you, they'll gloss over it, and again, when we're talking about the populations that they're dealing with, a lot of them, I mean, it's intimidating, and they may have been to a bank or something that got turned down. So they're coming in, their confidence in very high, and now here you are saying, "Hey, I can answer all your dreams. I can get you. What's my word? I can get you approved." And so you're hearing that. Hey, and that's all you focus on is you're getting me approved. I've got whatever situation I have going on, and I went over here. They denied me, but you're saying I can get approved. Hey, you pretty much it's like, hey, where I signed. So therefore, it might be in there. But again, it might be some real fine print, and that person ain't gonna sit down there and walk you through it because they know they are predatory. They are keying in on your angst, on getting you what they know that you need.
Go ahead, Terrence.
And to speak with that, as you said, taking advantage of people in a rough time, of course. So it's essentially you have two options. So say you've gone to a bank, you've applied, gone through their process, and you get declined. Okay, at the end of the day, the bill is still due. So it's like, what other option do you have? If you don't have any friends or family that you could borrow funds from, that's typically your only route. And with that being said, just from the last decade, from 2016 to 2026, this is information that I pulled from the Center of Responsible Lending and the Center of American Progress. The ages of 18 to 24, from the year pretty much leading up to 2019, 6% of all American adults was made up of 18 to 24, which were people that fell for predatory lending and tactics. And with that being said, when you think about deceptive marketing, how they talk about instant cash, like instant approvals, no credit check, these are people that have been underbanked. They don't have strong financial grounds. So when you get to a predatory lender, I can blow smoke in mirrors and tell you that, hey, we can get you approved for this. We can get you the cash. You're going to be able to pay your bills. But now I'm not talking about prepayment penalties. I'm not talking about fees. I'm not talking about how your interest rate affects your payment, because the only thing that you're hearing is solution to my problem.
There you go.
So when that happens, you get to take advantage of the younger people. That's who the predatory lenders are targeting, because when you have low credit history or no credit, you're underbanked, you don't understand how the financial world works. That allows me to go in and take advantage of you a lot easier.
So when we use the word predatory, obviously that's a bad word, right? That's a negative negative idea around it.
Yes.
But playing devil's advocate here, is it not a niche market? Does it not have a purpose, a good purpose for it?
Yeah, and I think it also has something to do with where the placement of the storefronts are. I noticed that I see a lot more payday loan places in more disinvested communities rather than more affluent communities, because when you have people that have that wealth and they have access to liquid assets, why do you need a payday loan? Same thing with like those used car lots where they like to take advantage of people. You typically see those in more disinvested areas of the communities because they know that people are in need and they don't really have a lot of options to go to.
Yeah, and it's funny because I was thinking about that as I was driving in. There is a niche, and there are some people. Let's say I've got my own business, and I don't have my finances in order, whatnot. There are some guys that make some good money, but they can't go to mainstream financing because their books aren't in order. But they can go somewhere like this, and they don't mind paying, the extra fees or the interest rate, because hey, that's just casualty of what it is, how they're doing their business, versus if their stuff isn't in order, they do that. But Terrence already talked about the vicious cycle that takes place. I mean, obviously, yes, you have something that needs to be taken care of, but you are going to go down a road that you're not going to get out. And that part is just is the travesty. And when you think about buy here, pay here, you're talking 300 to 500% APR, as opposed to credit cards 15 to 30%, and then maybe a bank 10 to 25 APR. There's folks that could get approved mainstream financing, but I live in a neighborhood, as Terrence said, they're right there. I'm by my door. That's what I'm gonna go to first, versus going in there and dealing with them, mainstream.
So that's where I wanted to go with that. When I think predatory lending, I think somebody who could qualify for traditional financing, but they just don't know any better. They're uneducated. Maybe they just walk right down the street and say, hey, this is a loan place. Let me go in there. And the place that's lending them money, lending institution, knows they could get traditional financing and doesn't refer them or recommend them to go doing that, right? And that's what I would see as predatory lending.
And I 100% think that deceptive marketing takes place because, again, some people are aware of what their credit score is. So if I tell you that there's no credit check and you know for a fact that you have very poor credit, why waste the time of getting your credit pulled to go through a decline if you know for a fact that they're not going to pull your credit to begin with? It's a for sure option for you. I mean, if you walk into a financial institution and you know that your credit score is not where it should be, and you need a couple $1,000s, we're going to look at you and we're going to tell you that you were declined. Now, if I'm telling you, hey, no credit check, you just come in, let us know what you need, we'll front it out for you. And in return, since you have poor credit, we get to give you an absorbent interest rate. That's how we win.
Yeah. So do we think that just because they're charging a higher than traditional financing interest rate, that's predatory?
One, I would say yes. Essentially, if I would compare it to the so-called 50-year mortgage that is up in the air as of right now, in terms of financing, when you looked at like a 50-year mortgage for like a house that only cost like $300,000, the amount of interest you were paying alone was like well over $1 million.
Yeah, but I'll say this. I mean, we talk about it. We teach it in our classes. If the lower your credit score, the more there's going to be fees. That's a view in traditional financing. So when you say just because somebody charges a higher interest rate, is that predatory? No, it's not. But when you're at, like I said, 300 to 500%, yes, that's what we're looking at. But you're right. If you walk into any bank, hey, my credit score is 600, 545. Yeah, they're going to loan you some money. You're going to pay at a higher rate than somebody who's got an 800 credit score. So I don't want to confuse that. And then the other thing too, there are some folks that don't just straight jump to that 305. I've had people that have approached me. They said, "Hey, JJ, I want the folks that you declined. I want to work with them."
Mhm.
And I've had a meeting with a gentleman, and I'm like, okay, because that's my thing. Again, we educate. I'm like, man, that sounds like predatory lending to me, And he's, no, and his rates again are higher than the bank, but he wants to do good for the community. He wants to help folks, and like I said, he has access to some funds. So now that scenario, I think again, it comes down where we're talking about being educated and not just walking out to the first thing smoking. But if you sit out and look, okay, they want to charge me, maybe APR is 120%. This guy's going to charge me, 30%. I mean, I weigh that. That's a little better than, the
So
other.
that's what I wanted to go with, is that there is a middle ground there between traditional financing and what we would call predatory lending too, which you can put whatever term I would call it, maybe like subprime lending is what they would call that, right?
I think it was
it's got its purpose.
alternative financial services.
Alternative, yeah. It's got its purpose there for the community, right? When a financial institution is deciding on what rate they're charging, they're also weighing the risk versus reward in this. What's the likelihood? And what tells a financial institution about what the likelihood is you're going to repay? What is that?
Credit score.
Credit score,
Right.
right? So if a traditional bank, financial institution, isn't willing to lend on subprime, then there's got to be a market there to help people get back on the feet, get that car, get what they need, but at a reasonable rate. It's going to come with an increase. So for listeners out there, if you're going to a financial institution, you're just hearing higher rate than what you see advertised, something like that, doesn't necessarily mean it's predatory. Understand what you're getting into, shop around, talk to people, if you have a banker, right? You have a banker you trust. Fortunately, we can't get you approved, but this is where I'd refer you to. This is where I'd recommend that you go, right? So there is a middle ground there with whatever you want to call it that helps the community. Just you're going to pay a little bit higher rate.
Right.
Correct.
And I would like to add on an equal responsibility on both ends, the financial institutions and the client, understanding the terms of the loan. So banks are obligated to share that, and it's on most loans have truth in lending disclosure. And that's where, when I mentioned earlier, you would see the annual percentage rate, you would see the monthly payment, you will see the finance charge, and you will see the terms of that. So in terms of what your first monthly payment will be, you will understand your grace period, you will know what will happen if you don't make your payment during the first grace period, what's the fee, what's the maximum fee you can get in case you were late, and vice versa. So understanding that is really critical. And financial institutions are obligated to really share that with clients, and clients must know that. And something else I would like to add on would be, and you mentioned that well, most banks price their loans differently based on their FICO score, the risk they want to stomach, and vice versa. So FICO score comes in play, income comes in play, debt to income comes in play. You could see someone with a 700 credit score, two people with 700 credit score, one may get a better rate because their debt to income is lower, they have an extensive credit history, things of that nature. So improving credit comes in very important in terms of understanding that, well, if I have a better credit, I have an opportunity to really get a better rate. If I lower my debt, I have an opportunity to make sure that at least banks are able to price their loan based on my risk level. Something else that also clients or our viewers really can note on is really understanding their goals. And mainly would be, yes, I'm borrowing this money, but what are my goals when I'm borrowing this money? What am I hoping to accomplish with this? Am I considering my existing debt? What is my monthly payment? What can I do to make sure that at least as I'm going in, I'm sharing with my banker about my goals, my debt goals, my monthly payment goals, what would make my life easier, and shopping around too. And so a lot of banks will tell you, most financial institutions will tell you before even they pull your credit, whether you can get approved or not. And that's based on their pricing structure. Clearly, banks will not tell you, no, I can't take your loan, because that would result into not giving you fair treatment. But you can ask questions that will make you understand, based on my credit score, do I have a chance to qualify for this? Based on my credit score, what is my monthly payment? These are my debts. What would you recommend? my goal out of this is to borrow this money, but also make sure my monthly payment stays within this. And that gives you an opportunity to make sure at least the loan doesn't give you an additional hardship. Looking around you, understanding that, okay, yes, I bank with this financial institution, but most banks will offer me a loan. Getting 3 comparisons of rates will also give you an opportunity to just make sure at least you're making the best decision, and you're evaluating on what's really critical. And so I would say a key takeaway, understanding what your goals are when you're borrowing money. Most loans should solve a need, but also should give you an opportunity to service that loan without being in an extra hardship.
Yeah.
If this monthly payment is putting you in a hardship, in a point where you're not able to facilitate most of your needs, then it may be time to reevaluate on whether you need that loan to begin with.
Yep. And going back to what you said about responsibility, right? It's your responsibility as a consumer when you're going through those loan terms to understand those loan terms and ask questions.
Right.
Right. If somebody's going through the loan packet and just say, here, sign here, beep, 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 red flag.
Yes.
Right. Start asking questions about that. Make sure you understand everything about that loan, what the financing is, what the terms are, what the payments are. Make sure that fits in your budget and you can do that.
Yes, and ask questions. It's your loan.
Mm-hmm.
It's your monthly payment. Ask questions. If they're going fast, pause. Terrence, what does this mean? What does APR mean? What does this late payment mean? What does auto pay mean? If you have anything that you have questions on, pause and ask. I think a closing should take at least 30 minutes on a good time frame, but it can also take an hour, because the goal there is they're giving you money, they expect a monthly payment, and as a borrower, you need to understand everything. I understand saying everything can also be intimidating, because there's a level of experience or knowledge that not everyone has. But I would say I'm a big take on note-taking, knowing your goals, understanding the bare minimum, and asking questions when it's needed.
So you got something to add real quick?
Yeah, I did. Technically, it's more of a question, I guess, more opinion based. So with that being said, because with all due respect, that does sound like it would apply to somebody that is seeking traditional financing, traditional loans that they did get approved for. Essentially, if you were to put somebody that's in a place where they can't get approved for traditional financing, they can't get a normal loan, and they're pretty much between a rock and a hard place, and the payday loan is pretty much the only avenue that they see available for them. Outside of these social programs that are available, if they can't get approved for those, what type of recommendations would you make from that point as far as them getting the funds that they need to make ends meet?
I think
You
maybe
asking?
you look at, am I solving a need? Can I do without? Because, and I get it, there are desperate times where you may need to make a decision. I get that. But also, it is fair to that person, if they're walking in and getting a payday loan, they also understand what problem are they solving. Is it worth waiting to get a paycheck? Is it worth maybe looking at resources around? Because the ultimate goal is to solve a problem and make a financial situation better, and not put someone in an extra hardship. Is it right that it happens? I don't believe so. Is it fair that the person is in that position? No. Is borrowing to solve a problem, it's like borrowing money to pay another debt, a problem? No. Maybe guidance, a little bit of discipline, a little bit of maybe evaluating additional options. But if it's needed, maybe taking that option. I'm very empathetic about it. But the key thing is, if someone is borrowing money, whether it's from a payday loan or from a bank or from a different financial institution, it is still a loan. It is bound by consumer laws, consumer finance laws. And it is for that borrower to make sure that they understand what this means. They understand the penalties. They understand the rates. They understand everything. And if I'm borrowing money from a payday loan, I'm going to pay interest for that. And they owe me that. They owe me that explanation.
See, the payday loans are one avenue I really see as a predatory thing, and you guys have probably seen it as well. But being in retail banking for many, many years, every single person I ever saw that got into that cycle of a payday loan never was able to get out of it.
Right.
It was a continuous thing because basically all you're doing is you're borrowing money, or you're using money you haven't yet earned.
Yeah.
That's it. You're using the money before you've earned it. So if you're using that to pay bills today, well, you're still gonna have bills next month, so you have to borrow that because when your paycheck comes in, it's already gone. It's already spoken for there. So there are those situations where when times are tough, you got to do what you got to do, but it really matters on, do you have any other options to get that money? Do you need to go get a second job for a little bit to catch up, to do what you need to do, pay those bills so you don't get in that cycle? Because ultimately, once you get in there, it's very, very tough to get out with the terms that they have and the penalties and all that type of stuff that come along with those things. It's a never-ending cycle, right? I view that a little bit different than a buy here, pay here car dealership where it's just, hey, I haven't kept my credit. My credit's not there. I have to have a car to get around, to get to work, to do this. This place is willing to lend me the money or sell me the car. I can't get that traditional finance from a bank. I got to do what I got to do there, right? So I don't know. I view those things a little bit differently.
Yeah, go ahead.
Oh, last thing. And I would say, we talk about relationships a lot. Of course, if you can talk to your utility companies, renting companies, all types of companies, and let them know what your current financial situation is. Most times they are willing to work with you. They'd be willing to push a payment back or change your payment date to meet something that also works with your financial situation.
Mortgage companies do that for clients.
Correct.
Yeah.
But that's what I was going to say with traditional financing. I mean, yes, they definitely work with you, can restructure all kind of stuff, know you that you're going to miss a payment. But you brought up second job. And again, that's something that I was going to bring up to Ben's point, the understanding. If you understand all the terms, okay, baby, okay, I'm going to pay this right now, but I have an opportunity to get this other job over here, so I can work this off. I'm going to get that, and then I'm going to pay it out. So the bottom line is you're not in a cycle. You can break that cycle. This is just something temporary that I need, and I have a solution to get out of it.
Mm-hmm. Yep. So last thing I wanted before we get out of here is, so how can somebody avoid predatory lending? What can they do to kind of stay out of that cycle?
I'm going to take a page out of JJ's book. Everybody's financial situation is different. I don't make the same as JJ makes. Ben doesn't make the same as I make. I say living below your means is the best thing that you can do. When you know that what you're paying out of your pocket doesn't exhaust all your finances or even get you close to exhausting all your finances, it gives you that little wiggle room. And that wiggle room is for the unexpected. So if your gas bill is higher than what it was supposed to be last month, or if your water bill is higher, or you just needed some extra change because you had an extra bill come through, living below your means allows you to get that wiggle room. Outside of that, if you are in a position where things have been stretched, then again, I've got to take a page out of JJ's book, looking for another job, potentially getting another job, just like we had a workshop last year. One of the kids there, she didn't like the job that she had, so she went and got another one to make more money. It is all about the mindset. If you feel like you're stuck and you're not going to get anywhere from that, and you're telling yourself that you're incapable of getting out of it, you're not going to have the drive or the motivation to get out of it. But if you tell yourself that you're going to do things differently, if you're going to cut back on some of your spending, you're going to start reevaluating your budget, as long as you're making the steps necessary to get out of the predatory lending or stay away from the predatory lending, you should be able to stay at least a couple steps ahead of that.
Gotcha. Ben, anything to add to that?
Yeah, I would say credit is very important. It is very important, especially if you're going to borrow money. And we will all borrow money at some point in our lives. And so taking the necessary steps to improve credit, build credit, continue building credit is also very important. Having that open conversation with people that we're borrowing money from. So let's say, for instance, we're getting through a financial hardship. We're communicating that to them because there are consumer law provisions that will give us accommodations. Loans can be modified to accommodate someone who has a loss of job. Loans can be modified to accommodate someone who's unable to make a payment because they're in a hospital. And so communicating that to lenders, letting them know about life events that may affect you in terms of servicing that loan is very critical. And I would also say asking questions, understanding questions when you're going to have maintaining a relationship with your personal banker or your local bank, and making sure that at least you're providing an open platform where you can ask questions about lending, you can ask questions about something that you want to know, and it's relatable, personal, in a way that they customize a solution that would work for you, whether that's getting a secured card, continuing to use a credit card, or even cash flow in the long run.
Yep. So I was going to go with credit as well. And there are the two things I see to help avoid predatory lending is educate yourself, understand what if predatory lending, the things are that are predatory lending, or institutions. What is a traditional financing, banks, credit unions, that type of thing, and then also credit. Start off understanding how important credit is to you and building it, so you don't find yourself in that situation where you have no other options other than predatory lending institutions to be able to get what you need. Right.
That's
So.
true.
Yeah, I mean, I tell you, the credit is great. I love it because again, you keep your credit tight. That means when you have an emergency, you go to that bank, you can get that loan, and then you pay that off. You know what that does? You're building a history. You're establishing a relationship, and you can always go back and get finances, get your loan when situations arise. The other thing, credit cards aren't bad. You know, we talked about that. If it's a situation where you have an emergency comes up, you can pay it. I know I get it paid off at the end of that month. You know, that gives me that 30 days or whatnot. Again, I'm establishing credit history. We talked about points. It may be something where you can earn some points to use later. But so credit cards aren't always bad. And again, everything all comes back to that credit, establishing that credit. And when your credit is where it's supposed to be, that's that confidence. You can go in any lending institution and get the finances that you need.
Yeah. Glad you brought that up because, a lot of times credit cards are looked at in a negative light when they actually can be positive. It just takes responsibility and being able to manage your money and using it appropriately to stay out of that trouble, of which puts you in that cycle of predatory lending. But true. A lot of that stuff comes from our own lack of education or mistakes that we've made and not understanding that. So.
Right.
All right, gentlemen. Great discussion, predatory lending. Good to be back with you guys in 2026. Anybody have anything to take us out with? Any announcements? Any big things coming up, JJ?
Well, hey, I'm glad you said that. Mm-hmm. You know, today, actually, Metro Human Relations Commission and the Urban League and the City of Fort Wayne, they're hosting a 4-part series. Today is the first series, 5:30 to 7:30 or 5:30 to 6:30 at the Island County Library. As a part of the housing summit. But they've got Shame of Chicago, Shame of the Nation. It's going to be, if you want to learn about redlining and things that were put in place years ago that kind of set, African Americans back. It's an excellent series, and there's going to be a discussion. It'll culminate on that last Wednesday, a discussion with the mayor, Linda Gold, and executive director of Habitat. Will be talking about these things. So my plan is to attend all 4 sessions, and then actually we're going to come on, follow them up tomorrow. We'll be discussing with everything that people talked about at the session. So come on out.
Awesome. I knew you always have something to add. Mr. Port Wayne always knows what's going on around here.
Yeah. Appreciate it.
And also, if I can add, I'm hoping that this conversation meant something to someone. And if there's anyone who's living paycheck to paycheck or getting payday loan, understanding that there's a lot of support. And I hope that they got a key takeaway that can be instrumental. And I would say if there's anything that is taking you back to that payday loan, try to figure it out. It's never too late to change it. It's never too late to build credit. It's never too late to rebuild credit. It's never too late to restructure. Do what you have to do. If it means talking to a banker, talk to a banker, figure it out. And we are also always available to help. So if there's anyone who's watching and is thinking about, well, it's a very sensitive topic. I don't know anyone who to talk to anyone. We are all open.
Mm-hmm. There you go.
Feel free to visit us.
Send us your questions.
Yeah.
Yeah.
It's back to our theme, relationships. We've talked about that. That's been our number one thing. Every workshop that we've done, every podcast, relationships.
Gotcha. Awesome. Thanks for taking us out with that, Ben. So great to be back on the set with you guys today. We got our new little graphics up here too.
James Scott production.
Mm-hmm. Nice. So we will be back in 2 weeks for you on the 18th of February with another show. Until then, we are Our Neutral Voices. Peace.